Hello. Today is Wednesday, August 26, 2026. Here is your daily signal. According to Fortune, President Donald Trump is preparing a new 7.5% tariff on Chinese goods to penalize China for flooding world markets with cheap exports, all while aiming to preserve a trade truce ahead of his summit with Xi Jinping. Since 2018, U.S.-China economic relations have been marked by rising tariffs, driving sharp shifts in global trade flows. The United States had already imposed tariffs ranging from 10% to 12.5% on Chinese manufacturing exports, triggering ongoing disputes as China increased its exports of underpriced goods. On August 24, Trump weighed this additional 7.5% tariff, and AP sources noted the move was positioned as a direct response to Beijing's practices but designed not to jeopardize upcoming diplomatic meetings. Meanwhile, according to Business Insider, Canadians have doubled down on their boycott of American goods and travel following these tariff announcements, underscoring regional tensions. In the near term, American consumers and manufacturers face higher input costs, and U.S. exporters could see reduced sales in Canada if consumer boycotts intensify. Over the medium term, prolonged trade hostilities between Washington and Beijing threaten global supply chain stability, could spark market volatility, and risk fracturing truce efforts if China retaliates further. Next, turning to how AI and workforce shortages are shaking up U.S. manufacturing and energy. Fortune reports that America's energy sector alone will need 500,000 more workers by 2030 due to an AI-driven surge in demand, but unless large-scale retraining takes place, humanoid robots will likely need to fill that gap. AI and automation are now fundamentally transforming U.S. manufacturing and energy, yet a growing shortfall of skilled labor is constraining infrastructure and industrial productivity even as automation demand soars. Manufacturing and robotics firms face new threats and opportunities as sectoral growth becomes tightly intertwined with technological change. On August 24, the looming labor gap was laid bare, and as recently as August 25, Business Insider underscored how U.S. robotics research still depends heavily on cheap, reliable Chinese components, a vulnerability for domestic supply chains. Without aggressive upskilling and retraining, the rapid adoption of humanoid robots could push out lower-skilled jobs. Medium term, the U.S. faces stiffer competition with China for robotics and automation technology, a challenge for industrial strategy as both supply resilience and equity in the labor market become urgent priorities. While productivity in both energy and manufacturing may rise, the human cost and political implications of labor market disruption will loom large for years ahead. Now, to the cutting edge of space propulsion, with new results from the IVO Quantum Drive's orbital thrust test. Next Big Future reports that the August 24 orbital test of the IVO Quantum Drive produced findings that remain unresolved, raising new questions about the validity of quantized inertia models as an explanation for potential propellantless thrust. The Quantum Drive was designed to demonstrate orbital propulsion without fuel, putting the established tenets of physics to a real-world test. Dr. Mike McCulloch, originator of quantized inertia theory, led the theoretical development, with IVO Limited executing the technical demonstration to see whether physical anomalies observed in ground tests could scale to space. This orbital test, discussed in detail by Next Big Future, highlighted the technical and physical challenges in isolating a demonstrable thrust signal amid orbital background noise, a frontier for both engineers and physicists. If independent testing confirms an actual effect, quantized inertia propulsion could revolutionize satellite positioning and economics, making fuel-free maneuvering a reality. In the near term, these results are likely to spur further investment in experimental propulsion. Over the medium term, validating or debunking quantized inertia could upend foundational physics and prompt broad regulatory and funding shifts, while the experiment's ambiguous outcome means more rigorous and repeatable tests are inevitable. Now, onto the markets. International markets posted mixed results, with Taiwan standing out for a 1.2% daily gain, while Indonesia lagged behind with a sharp day-over-day drop of 2.2%. Among European indices, the Netherlands outperformed on the month with nearly 4.9% growth, but Chile retreated 1.2% today as top loser in its group. Commodities saw agriculture surge, notably corn up 2.2% and wheat soaring over 5.2% daily. But gold and silver fell, with gold down 1.5% and silver losing 1.3%, while U.S. oil gained over 1.8%, making USO the leader among major contracts. In U.S. sectors, semiconductors ticked up fractionally with stocks, while clean energy declined and the S&P 500 essentially flatlined with a minor 0.03% monthly increase. Favorites were led by Oracle, up 2.3% daily with strong momentum, while Adobe and Amazon each slipped about 0.8%. Marvel surged on the month, and Micron and Apple also posted gains. In individual stocks, top gainer KLX Energy Rights soared nearly 292%, Create Enterprise jumped 147%, Bellotto Group climbed 71%, and Abercrombie & Fitch advanced 31%, while Greenland Mines dropped 44% as the leading loser, and Weta Robotics retreated almost 39%. That's it for today. You can find more news and details on our website. Goodbye.